Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Alibaba, ticker symbol BABA. And so I wanted to follow up on last week's video, going over what happened over the course of the past week, as well as go over these lines, which I modified from the ones that you saw last week. And so to start, BABA closed at a price of $73.14, being up just over 1.5% on the day, today as I record this, Monday, February 12th. And so what happened over the course of the past week? I'll get into that, but first I just want to go over this falling wedge that price has been residing in since let's see, the beginning of 2023, the top being hit on January 26th at a high of $119.69. So that being the top pivot point for the top of the wedge. And then the other pivot point is based on the high of November 15th. And then also the bottom of the wedge based on the low over here, I believe on March 15th. Did get test of that over here at the end of May. And then it looks like the other pivot point is here around December 11th. We did get a little break below the bottom of that wedge, but that was a fake out as it appears. Price is trading much higher than that now. And then I do have marked in these blue lines a couple gaps to the upside that do stand out to me, and then also a couple gaps to the downside. So really, those could be leading the price in either direction, but I'm going to be zooming in on the chart so we can look at some of these levels and trend lines that I have marked. And so here, right here, I have $69.55 marked, which was the open on December 11th. And so I do think that is going to be a key level to hold above. We did get a near test of it on, let's see, February 9th. So just, I believe, a couple days after they reported earnings on the 7th. And just before earnings, we did see this run up, but then a pullback following earnings. And so when I did the last video, that was following the trading day of February 2nd. So that was Friday. And then on Monday, we saw this almost 4% move up. And interestingly, during the stream, when I recorded the last video, I had suggested that this hammer candle following this downtrend could suggest a reversal, and we could get a test of the top of this wedge where this yellow line is. And that's exactly what we saw. And then we saw a continuation to the top of that larger falling wedge. But we did get a rejection there. We could not get two closes above that level to confirm the breakout. As you can see, we did get a pullback the following day, actually closing below that yellow downtrend, testing the bottom of this little wedge that I have drawn in here, between the yellow and orange trend lines. Got one close below it, but then that was, a fake out. We closed the next day above, and then on today, February 12th, does look like we got rejected from the yellow downtrend. So I do think it's pretty interesting how price has been bouncing around these levels, all of them being based on the rough lines that I drew in last week's video, but then I just modified them to correspond to highs and lows of specific days. And so here, this yellow downtrend is based on the low of November 14th, as well as the high of December 29th. And so we do see that has been respected as a level of resistance other than this quick breakout that seemed to be a fake out. And then this orange uptrend is based on the open of December 11th, as well as the high of January 16th. And from there, we got a nice touch of that level on February 2nd when I had recorded that last video. And so that hammer seemed like it was positioned perfectly for a bounce. And that is exactly what we saw. And so, what do I see with price moving forward? I do think that these gaps to the downside could be filled. Possible there will be another fake out below the bottom of the wedge. But, what actually stands out to me as a little more compelling is a breakout of the wedge to the upside and potentially filling these gaps up here. And so that is really based on a Fibonacci retracement that I will do in a second, so not this one, but I do think that this retracement will highlight some levels that we do need to hold as support before we can break out of the wedge. And so this retracement goes from the low of January 22nd up to the high that we recently saw on February 6th. And from that, it does look like we pulled back to right around the 618 at a price of $71.10. So I do think it is pretty key that we, did get a fake out below that level, but a close above on the following day. So that does suggest that that level is being respected. And now, following the close on Monday, we did get a test of the 382 at a price of $73.87. But we are closing the day above the 50% retracement at $72.48. So I do think that if we can get another close above that level, above $72.50, I do think that could suggest that this level is acting as support, and we will see another attempt at breaking above the 382 and this yellow downtrend, potentially getting up to the 236 at a price of $75.58. Following a test of that, we might pull back and test the 382 as support before attempting to break out of the falling wedge and getting back to the high that we recently saw of $78.34. And so the retracement that I wanted to do that could suggest that we will see prices moving to the upside. If I take a retracement from the high here down to this low, there are actually no retracements that I included here because I wanted to look at an extension of this retracement to see where price could go to the upside. So if I just adjust the y-axis, we can see that that 1618 extension goes to a price of $83.49. So if we can break out of this wedge and break above this high, get a couple closes above that, confirming the breakout, I do think that we could be moving up to fill either of these gaps, the lower one at $81.23 and the upper one at $84.75. And to move towards those gaps would be moving towards this 1618 retracement. So I do feel that is feasible as long as we are able to break above the yellow downtrend, hold the key levels that I went over, as well as break above the larger scale falling wedge. I do think that $84 really is pretty feasible. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.